welcome to your real estate journey, expert tips for buyers and sellers. I'm Dolly Lopez, your real estate coach and broker in the state of Florida and Kentucky. And today I am joined by Ana. She's one of the best CPAs that I've personally known. And I wanted to invite her because I have a bunch of questions. So Ana Garcia, she's a partner at Ana B Garcia CPA, which is a CPA firm that specializes in real estate taxes and strategies to help people save money on their taxes. And she has about 20 years of experience or so. So welcome, Ana. How are you?
Hi, Dolly. Thank you so much for having me here today. It's a pleasure to be here with you, with your viewers. And I can't wait to talk to everyone about my two passions, which are taxes and real estate.
I know I love when I love talking to CPAs when it comes to real estate because that's my world. That's all I do. And I really don't know a whole lot about taxes. And I know there's so much to learn. And that's why I feel having someone like you that helps people to make strategies around their taxes and how they can make it better legally, make it better so they can pay less taxes. That's just a blessing on its own. So I'm really appreciative that you came on board and you accepted my invitation to do this podcast with me. So without further ado, let me go ahead and start with some questions because, as I said, I have some questions myself. So as you know, real estate investing, it's a really good strategy for building wealth. But can you explain how the government incentivizes investors through taxes and their benefits?
Yes, and that's one of the main reasons why I always tell my clients, you have to continue to invest in real estate. Our wealthiest clients, our most successful clients are buying real estate, right? So the reason why they do it is exactly because of that. The government wants us, the taxpayers, to go on a specific route, right? They want to incentivize us to purchase property and be able to provide living facilities, right, for everybody else who needs to rent because they're not available able to buy yet. So the government, if you think about it, the government cannot provide housing for everybody in the country, right? So they're saying, okay, taxpayer, can you go and you buy real estate and be the landlord for some of these people who need housing? And so that way, the government is able to say, okay, I know everybody can, now go and find a place to live. It's not an easy thing. And so that's why the government tries to promote people to do this.
And so one of the most attractive tax advantages for real estate investors is the ability to report losses to lower their tax liabilities. Can you explain how that works and why it's a significant benefit?
Yes. So what happens is when you own a business, right, in general, there are certain expenses you can deduct that if you are a W 2 employee, a wage earner, you're not able to deduct. And these are, for example, right, your cell phone, because you're making phone calls for your business. You have the internet, maybe you have a little room in your house where you do some business out of your laptop, many things that your miles, you have to go to different places, right, move around for your business. Because real estate investing is a business, it also qualifies for all of these expenses. And what happens is when you start adding these expenses, many times your real estate investments result in a loss for your taxes. And I haven't even mentioned depreciation. Depreciation is also one of the many advantages of and incentives that the government gives to real estate investors to lower their taxes. So when you have these losses on your tax return, what happens is your other income, be it W-2 income, investment income, whatever, right? It offsets these real estate losses, offset the income from other sources. There are some rules about this, and we can talk about it in a different podcast. But definitely, one of the main reasons we invest in real estate is because of the tax advantages and the losses.
Now, as you mentioned, the depreciation is another major benefit for real estate investors. Now, can you break down how depreciation works for tax purposes and why is such a powerful tool? I mean, if it's just a property, it could be a residential or commercial. So, how does that work?
Right? So when you have commercial real estate, for example, the IRS says, okay, you have 39 years to depreciate your commercial building. And when we say commercial, just for the viewers so they understand, we're saying maybe a shopping center, right? Where you have your supermarket, you have your little beauty salon, you have your restaurants, right? This is more commercial. That is depreciated over 39 years. And then you have residential, which is the one that has the tenants, the people, the families who live there and sleep there, right? So these residential buildings or properties, it could be a single home, it could be a condominium, a condo unit, or it could be a multifamily. These are depreciated over 27.5 years. And the beauty of depreciation is, guess what? Your property is actually increasing in value. It is appreciating, right? Another beauty of real estate and why it really creates wealth for people. While your property is actually appreciating, it's worth more every year. The government is giving you a tax cut because you are actually having this depreciation expense, which is an expense on paper. If nothing's coming out of your pocket, yet it is creating more losses and lowering your income in general. So therefore, lowering your tax liability.
Okay, so you also mentioned about appreciation, which definitely is another key factor on real estate investing. Now, how does it not only grow your wealth, but also provides ongoing tax advantages? Just the appreciation portion of it.
So the appreciation portion of it is what really, when you buy an asset, and this is why also real estate is such a powerful thing, right? For retirement, for income purposes. Real estate is the only asset that I know that you pay 20% for something that's worth 100%. Right? You get a mortgage of $20,000. You put down $20,000 out of pocket, and you get $80,000 in a loan. So the property is really worth 100,000, but you only paid 20, right? And then you have your tenants really paying off your mortgage, but the property is really increasing in value. So what happens is you start creating this equity, which is so valuable. You go to a bank and then you can refinance that property. You can cash out, right? This is equity you can take out, and you go and you buy another property, and you keep doing and repeating, and all of a sudden you have many properties. We always advise our clients to buy one property, depending on the size, of course, one property per year, if not maybe every 2 years, right? Depending, like I said, sometimes people buy multifamily, sometimes they buy just one condo unit, so it does vary in how much money you have to put in.
Now, let me ask, because so do you suggest to get the appreciation, obviously the equity of the properties, take it out via a refinance or a home equity loan or a home equity line, then turn around and with that money purchase another property that is going to be paying itself off the same as this older property, and in that way increase your real estate portfolio? Is that, am I understanding right?
Yes,
We're talking
exactly.
the same language then, which I love it.
Yes, think about it. You have this, if you have, for several reasons, right? You are increasing your portfolio, which means you're increasing your wealth, which means you're increasing your deductions on your taxes, which means you're decreasing your tax liability, which also means that, and I forgot what I was going to say, with the, when you oh, okay, I know what I was going to. The other factor important here is the legal factor, right? So what happens is you have a property that is increasing in value. Let's say that because your mortgage is going down, the property is appreciating. So now you have more and more equity every time, and this could cause a legal issue because more people, your property is more exposed. The moment you take money out of that property, out of that equity, then your property now again has a big mortgage. The attorneys are not going to go after that property, right?
You're
But you're
right.
building.
I never even thought of that way. And I think about everything on real estate, but I don't. So that's, I mean, that
Yes.
definitely makes sense. Now, what happens just whenever you do that type of loan or you're refinancing to take the money out, is there any tax implications while doing that process?
Not in terms of taxes. The only implication you have is you're going to have another mortgage, right? So you have a lot more interest, more expenses, more whatever relating to that loan, and you are going to have closing costs. And one thing to consider too is now you're going to have more mortgage, more things to pay, right? More of a that loan. So whatever property, and this happens with every time you're going to buy a property, it has to make sense financially. You have to make sure that both of your property are going to cover those mortgages and any costs associated with the properties, right? And ideally, you want to make some cash flow too.
Well, yeah, that would be great. And I know in real estate investing, whenever you go to the residential aspect of it, you might not cash flow as much as eventually you would, depending on how. That's why people need to meet with someone like you. So, Anna, how can people get in contact with you? How can they learn more about you? Because once again, there's a lot of CPAs, but I don't I don't know many CPAs that specializes in creating strategies to help people save on taxes. I truly don't. I know a bunch of CPAs and they just do taxes. So what is it that you guys do? What area do you cover? And what would be a good way for people to communicate with you directly?
Oh yes. So, like you said, unfortunately, there's just many CPAs and accountants who just see their clients once a year. They see their clients at tax time, which is April of the following year, which means, oh my gosh, now we're late to do this strategy and that strategy. Majority of the strategies that we implement for our clients, we do throughout the year. So right now we're working with our clients to implement strategies for the year 2024 because we're in 2024. So we implement current year strategies before the year ends in order for the client to really take advantage. There are a few strategies that can be implemented the year after, but it's not so many, right? So we try to be more proactive with our clients. We meet frequently throughout the year. We're available for our clients because you have questions, right? We don't want our clients to be afraid of calling us to ask a question. We want them to be comfortable and feel free to give us a call whenever, or send us an email, depending on how much they need that advice. And so, the best way to reach us, and we would love to talk to anybody, any of your viewers who would like to get some tax planning help. And this is tax planning season right now, so we're getting ready for that. And the best way to reach us is going through our website, which is Ana B Garcia CPA.com. And in there, you can fill out a form and we'll give you a call. Or you can reach us directly by calling the phone number here on the screen, 754-273.
Yeah, 273-5840.
There you go.
So, Anna, what areas do you cover? Do you just cover Florida, all the US, internationally? How does that work?
We work with any real estate investor really all over the US. We have clients in different states, North Carolina, South Carolina, Tennessee, Alabama, Georgia, of course, Florida. We are based out of Florida, New York. I mean, you name it, we work with clients all over the US who invest in real estate or are looking to start investing in real estate. We also work with business owners, right, to lower their tax liabilities. And we do have international clients who have properties in the US and are trying to get the most advantageous ways to pay taxes here.
Perfect. Anna, thank you so much for your time and dedication and teaching us about this. I hope to have you on board on future podcasts because taxes is a really something that we should all be concerned about and try to do it properly. So I hope you guys enjoy our episode. Feel free to subscribe. It will help us a lot. So if you do, and it's completely free, just subscribe to our channel, share our content. And if you would like to know anything about tax related issues, please comment them below and I'll make sure to cover them in future podcasts. Thank you. And I'll see you next week. Bye-bye.
Thank you, everyone.